Hey everyone, and welcome to this explainer. Okay, picture this. You wake up, check your investment app, and that $10,000 you started with has literally turned into 100 grand. I mean, for most of us, that kind of tenfold growth sounds totally out of reach, right? Like it's strictly reserved for Wall Street insiders or lottery winners. But I am so excited to tell you today that the truth is way less dramatic and actually super achievable. People have been doing this for decades just by following disciplined, realistic strategies. So today, we're breaking down exactly how you can do this, the timelines that actually make sense, and the mistakes you absolutely have to avoid. Let's get into it. So let's just address the elephant in the room right off the bat. Can $10,000 really become $100,000? It is completely valid to dream about that kind of financial freedom, and the answer is a massive yes. But, and this is a really big but, the real answer does not involve buying lotto tickets, shady insider trading, or, having a crystal ball. The biggest issue is that people either expect results way too fast or they take these totally wild, unnecessary risks trying to get rich overnight. And honestly, that is exactly why so many people get completely off track. When we hear the goal of multiplying our money by 10, we instantly assume we need to find the next Amazon or predict some massive crypto boom. That's the social media myth, right? It's flashy, it goes viral, but it literally destroys so many portfolios. Real wealth building is actually way less exciting than your feed makes it seem. The path that actually works is all about consistency, patience, and compound growth. Here is our roadmap for today. First, the reality check. Then, core growth vehicles. Third, timeline accelerators. Fourth, the defense strategy. And finally, the ultimate asset. Starting off with Section 1, the reality check, and the math of compounding.
24. Yep. If you took your $10,000, invested it, and earned an average annual return of 10%, which is right around the historical average of the S&P 500, it would take roughly 24 years to reach $100,000 without you adding a single extra penny. I know, 24 years sounds like forever, but it anchors our expectations. It shows us the undeniable power of compounding and just how important patience really is.
But why does that actually happen? Well, compound growth is often called the eighth wonder of the world, and honestly, it is the absolute hero of our wealth building story. It basically just means your money generates returns, and then those returns start generating returns of their own. It's like your money is having babies, and then those babies are having babies. Over long periods, this creates a snowball effect that is basically magic. But I know you're probably thinking, I do not want to wait 24 years, and I totally get that. That is exactly where strategic investing comes into play. Moving on to Section 2, core growth vehicles and proven strategies. If you want to build this kind of wealth, you absolutely need the right tools. One of the best, most realistic paths starts with broad market index funds. Instead of trying to pick individual winning stocks, which is literally so hard to do consistently, you just buy funds that track huge portions of the entire market. This gives you amazing diversification, drops your risk, and lets you just ride the long-term wave of the economy. Another fantastic tool, dividend-paying companies. You get two sources of growth here. The stock price hopefully goes up, and the company pays you regular cash dividends, which you can just reinvest to buy even more shares. And of course, we can't forget about real estate. But buying physical property takes huge amounts of capital, right? Well, modern options exist, like REITs, or real estate investment trusts. A REIT is simply a company that owns or finances income-generating real estate. This is amazing because it lets you get exposure to real estate and receive income distributions without needing to save up some massive down payment for a physical building. Combining stocks with REITs creates a beautifully balanced portfolio. All right, Section 3, timeline accelerators. Let's speed up the clock. Okay, so where you put your money actually matters just as much as what you invest in. In the US, retirement accounts give you a literal superpower. Massive tax advantages. A traditional 401k lets you contribute pre-tax income, which drops your taxable earnings right now. On the flip side, a Roth IRA gives you completely tax-free withdrawals in retirement. These benefits might feel pretty tiny month to month, but over a couple of decades, they literally save you thousands and thousands of dollars, leaving so much more money to actively compound. And speaking of 401ks, I really need to emphasize this next point. A lot of employers offer matching contributions. If your employer offers a match and you aren't taking full advantage of it, you are essentially walking away from free money. And I mean, who doesn't love free money? Capturing that match is quite literally one of the absolute fastest ways to speed up your progress toward that $100,000 goal. The other massive accelerator is continuously adding fuel to your fire by upping your earning power. Think about the difference here. If you just invest your initial $10K and literally do nothing else, you're stuck on that 24-year timeline. But what if you take on a side hustle or negotiate a raise and throw an extra $500 a month into those investments? You're going to reach six figures so much faster. Investing is super powerful, but investing combined with higher income, that is where the magic really happens.
Which brings us to Section 4, the defense strategy and how to protect your portfolio.
This right here is where so many people sabotage themselves. They chase whatever's trending on TikTok, meme stocks one year, crypto the next, maybe speculative AI penny stocks. A tiny fraction might win, but so many more suffer devastating losses. Just imagine watching 50% of your hard-earned portfolio totally vanish because you chased a hype train. It happens all the time, and it is a heartbreaking reality for emotional investors. And here is the truly brutal math behind taking those uncalculated risks. If you lose 50% of your portfolio, you don't just need a 50% gain to recover. You need a massive 100% gain just to get back to the exact dollar amount where you started. Think about it. If your $10,000 drops to $5,000, a 50% gain only gets you to $7,500. You literally have to double your money, a 100% gain, just to break even. This is exactly why protecting your capital is just as critical as growing it. So how do we actually protect the bag? It really just comes down to these simple steps. 1. Diversify across different sectors and asset classes. Do not put all your eggs in one trendy basket. 2. Spread your money intelligently to experience smoother returns. And 3, which is honestly the hardest part, remove emotion. Fear makes people panic sell during market crashes, and greed makes them buy at totally inflated prices during a bull run. The people who actually hit their financial milestones remain incredibly disciplined and totally ignore the crazy headlines. Finally, Section 5. The ultimate asset, which is time and patience. Perhaps the single most overlooked factor in reaching $100,000 is simply time. We constantly underestimate what can happen over 10 or 20 years, while massively overestimating what will happen in a few months. Financial news is absolutely obsessed with daily market movements. The panic, the excitement, red arrows, green arrows. But real wealth, that is built over decades, not days. The investors who consistently contribute, who stay completely cool when the market dips, and who faithfully reinvest, they are the ones rewarded far beyond their expectations. Patience isn't just a virtue, it is literally the most valuable asset you possess. Turning $10,000 into $100,000 is totally realistically possible. But it won't happen through shortcuts. It happens through disciplined investing, tax advantages, risk management, and the absolute magic of compounding. So I'll leave you with this question to think about. Will you chase the next flashy trend and risk it all, or will you let time and proven strategies do the heavy lifting for you? The journey takes time, but every single success story starts with that first step. Thanks so much for joining me on this explainer, and I'll see you next time.